that you have to take on how the long-term supply demand for rubber is going to look like. And today China has 60 million passenger cars in its population. The International Energy Agency says that it will grow to 400 million by 2035. From 60 million to 400 million. Between 2000 and 2010, China's car population intensity, that is number of cars per thousand people, grew tenfold. From 4 cars per thousand people to 40 cars per thousand people. The world average is 150 cars per thousand people. The US is at 790, 800 cars per thousand people. When Chinese car population goes to 400 million, it will still be 310 cars per thousand people. Still significantly lower than much of Europe, much of Japan, all of Japan. And India similarly will grow from 16 million passenger cars now to 160 million passenger cars by 2035. Every car you put on the road, you have to take away 0.074 hectares of land to support that car in terms of roads and parking lots to support that car. So China, if it goes to 400 million cars, from the current 60 million, that is roughly 360 million cars additional at 0.07 hectares, it will have to take off something like 50 million hectares from cultivation. Total land and agriculture in China today is 120 million hectares. We believe it is only 116. The government's figures are 120 million hectares. And the Chinese government has a red line for food self-sufficiency, which says that they should be putting 124 million hectares under cultivation. And which is why China has today become the world's largest importer of soybean. Today it imports more than 60-70 million tons of soybean, likely to go up to 80 million tons of soybean. And why does it do that? Because in order to become self-sufficient in soybean cultivation, if they need to substitute that imports, they need to put up 40 million hectares additionally under cultivation. The 4 food crops have totally got about 90 million hectares under cultivation. So today China, as a result of its growth in the middle class, as a result of urbanization, is now roughly consuming 50% of all the pork meat that is produced in the world, 40% of all the eggs that is produced in the world, nearly 18% of all the poultry meat that is produced in the world, 12% of all the beef that is produced in the world, a third of all the soybean that is produced in the world, a quarter of all the rice that is produced in the world, about 18% of all the wheat that is grown in the world. So this year we expect China will import 110 million tons of grains. 10 years ago they imported 0. Right? We don't think China and India have any hope in hell to really produce all the food that they need. We expect that they will import between 5 and 20% of their total food requirements in the next 10 to 15 years. And that can have a significant impact on the trade flows and a significant impact on potentially what can happen to prices. On the demand side, in addition to all of these problems that we have seen, we have also shot ourselves in the feet by diverting more food and feed raw materials to biofuels. So that's a big elephant in the room in palm as well. But 55% of all the sugarcane crop in Brazil went into ethanol manufacturing, and 40% of all the corn crop in USA went into ethanol manufacturing, and about roughly 12-13% of all world oilseed production has gone into biodiesel or ethanol manufacturing, or biodiesel manufacturing. And that is a new source of demand. In the past there were only these 3 F's, food, feed and fiber. Now there's a 4th F, which is fuel. And today, if the Indonesian government implements its policy on energy diversification, then at least 13 million tons of palm oil, if they really implement it, would be diverted into biodiesel manufacturing from the current roughly 2 odd million tons based on the current subsidies and everything else that is being announced. But that's a big game changer as well. And on the supply side, we have serious constraints. So we have constraints in terms of arable land. We have a loss of arable land of roughly 0.5%, 0.6% in China each year. In 2004, the Chinese government panicked when the food production came down, grain production came down to 430 million tons. So they've announced a massive Sanong program, which is reforms in agriculture and rural development. And today they invest about $250 billion last year in subsidies for the agricultural sector. And what happened? Fertilizer usage just ramped up. So they now apply about half a ton of fertilizer per hectare, which is amongst the highest in the world, which has resulted in pollution and other issues. mid-size and large-size tractors quadrupled in China in the last 10 years. Quadrupled. So they're going in for a more intensive form of agriculture to try and meet all of these shortfalls. Almost a third of Chinese CPI is based on food CPI. But that has accounted for 95% of all the inflation that China has had in the last 10 years. And that is why the Chinese government is sort of panicking. But it is losing arable land because of the intensity with which it's cultivated. So it is not zero tillage, which is the best practice today to go towards zero tillage. They're losing topsoil. I remember in 2004 when the Chinese government panicked, they announced the banning of any golf courses coming up in China on arable land. And since that decree was passed, more than 450 golf courses have come up on arable land because they just reclassified as a degraded land, and you can do anything you want with degraded land. So it's very difficult for the Chinese government to control that. The second is the rate of productivity is declining. I think all the low-hanging fruits have been harvested. So if you look at the rate of growth in productivity in farming, between 1970 and 2000 it averaged 2.4%. Between 2000 and 2010, it halved to 1.2%. And between 2010 and 14, it is 0.15% productivity growth rates. Because you need significant more investment in agriculture to find the next productivity breakthroughs. And that money is not forthcoming. Thirdly, we have very significant infrastructure deficits. We have to invest roughly $9 trillion between now and 2050 to build the infrastructure required to increase crop production, livestock production, and all of the logistics, whether it's wet storage, dry storage, whether it's cold stores, whether it's all of the infrastructure. Where is that money going to come from? And therefore, we have to contend with the fact that we're going to lose a lot of the production that we have in terms of waste. Let me move on to the last part. So if you look at all of this backdrop, and then look at palm and the vegetable oil complex and where the opportunities are, and if you believe, and I'm not going to go through price outlooks here because you've got some experts with deep insights who are going to be sharing their views on that, so I won't get in there. But if you assume consensus estimates that from a total production today of 168 million tons going up in by 2030 to about 242 million tons, we need to grow edible oil production by roughly 78 million tons. Based on cost of production in soybean in the principal areas and marginal areas, if you look at South America, North America, etc., you need roughly a price for soybean oil of about $880 to really bring in more land to cultivate soybeans. So if 32 million tons of this shortfall of 78 million tons is expected to come from soybean, you need significantly higher prices to induce that supply response. And then where will the balance 78 million tons come from? If you look at rapeseed and sunflower, together they will contribute about 14 million tons of this change, probably at best case scenario by 2030. And none of that is coming from any acreage growth. All of it is coming from assuming that productivity will grow by 2.7% or 2.5% to 2.7%, which is tough to see unless there's a new breakthrough in productivity growth. In palm, in order to produce 32 million tons of additional CPO at 4 tons per CPO, you need roughly 8 million hectares under cultivation that you have to put in place over the course of the next 8 years to bridge the gap. We estimate that the best case scenario in Indonesia is for a planting of between 250 and 300 million hectares a year, which would mean even if all of that additional new planting is based on new clonal varieties with 50% more average production or yield than the current average in Indonesia, which is slightly less than 4 tons of CPO per hectare, even if the 6 tons of CPO per hectare, there would be a significant shortfall. So totally we expect increased new plantings in Indonesia to be between 2 and 2.4 million hectares over the course of the next 8 years. In Malaysia, 500,000 hectares. And we believe in Africa it will be another 500,000 hectares. So totally we will have about 3.5 million hectares, and I don't think Latin America will be more than 250,000 hectares at best. You know the costs in these countries. That means we'll still have a significant supply shortfall unless that demand is rational. And And here we are assuming that biodiesel demand and disappearance because of biodiesel demand will be at the current levels, not at the enhanced levels of what if all these countries who have announced various mandates or subsidies, etc., would actually be able to go through with that. That would be a very different story altogether. It will only compound and exacerbate this problem. So that is why we believe that Africa has the next frontier for palm. Africa, there are about 11 countries in Africa which we believe are suitable for palm growth based on the agroclimatic conditions and where they are located from a geographical standpoint. And most of them have already got smallholder plantation culture. Several of them now, big investments are being made in large-scale plantations. But the whole issue is that if you look at these countries, they have different issues. The biggest success factor for me in palm is the right agroclimatic zone. Obviously, you can't grow it if there isn't the right amount of rainfall and the right soil and growing conditions. But more importantly, you need to get adequate large tracts of land which are contiguous and which are reasonable in terms of valuation. There are very few places where you can get that today. Today, globally, we cultivate 1.5 billion hectares of land. Yeah. There is an additional estimated 1 billion hectares of land that is available, which is arable. Out of that 1 billion hectares that is available, 600 million hectares is in Africa. 60% of all the arable land that is available in the world is really in Africa. But obviously there's massive investments required to develop that land. So to develop a 50,000 hectare palm plantation in Gabon, where we are invested, it is going to cost us roughly $10,000 per hectare, and therefore $500 million. It's a massive investment. And you have to invest in all the infrastructure yourself. Very little infrastructure is available, so the costs are slightly higher. But even today, if you go to Malaysia, you are talking about new plantation development, cost to maturity of between $10,000 and $11,000 per hectare. And in Indonesia, between $9,000 and $9,750 per hectare. So it's not way off. But you have to get land that is free of social encumbrances. You should not have a situation where 15 years after you have planted and it is in peak production cycle, farmers come and lay ownership of the land, as it has happened in this part of the world and as it has happened in Africa. So getting land without social encumbrances and also without environmental encumbrances, which is no peat or no high carbon stock forest land or SCV land being set aside. So the first plantation that we invested in Gabon, in Congo, we were able to convert only about 38% of the land into plantable land. The rest had to be left aside for the corridors as well as the HCV participation. And the one thing that we have to remember is legal rights mean very little, because customary land rights, and a lot of Asian companies that have invested in Africa realize that the hard way, that customary land rights take precedence over legal land rights. So today, if you look at Africa, we believe that we will have a cash cost of production of about $450 to $460, compared to Indonesia of about $400, compared to Malaysia of about $425, $430. But our realization, because there's no export tax, and because of the high realization of the olein markets in Africa, we will have a realization which is roughly $250 to $300 better than the realization you get in Southeast Asia or Europe or other markets. And therefore, it is a very attractive opportunity. Now, we've got a booth here, which is our second phase of our project, which is we are partnering with the Republic of Gabon government to launch a large outgrower program, modeled on what we have learned from the FELDA experience in Malaysia and the Indonesian plasma program. We have tried to structure a program along with the government that will get best practices of all of this. And we are happy to talk to you about Africa, our experience. And for us, we are willing to share this openly and freely because we believe that we need more investments in African agriculture. And I think the natural investors would be people who have deep experience in planting in palm here or rubber here. So I would encourage and welcome all of you to have a chat with me and my team here. We have about 11 or 12 people from Mulam here, and there are some Republic of Gabon government representatives as well. We would be happy to take any questions if any of you have interest in investing in Africa. Thank you for your patience.
Thank you very much. I would like to invite you to kindly remain on stage.